and 25 stories that change the way we do business. A new twist on Economics 101, how supply and demand defined our sense of style.
Cheap is definitely chic.
And the trends that have everyone talking. It's risky business, but customers say that's entertainment.
It's a game that appeals to those that are very competitive, like being on the edge.
From boom to busted. It's all about the money as we count down the top 25 business stories that defined our world over the past 25 years. Welcome to CNN's Top 25. I'm Velshi, joining you from New York City. This month, we're counting down the top 25 business stories of the last 25 years as CNN celebrates its silver anniversary. Well, the New York Stock Exchange traces its origins back to, of all things, a buttonwood tree, which stood at 68 Wall Street. Back in 1792, a group of 24 businessmen gathered around that tree, and they came up with a system that's evolved into today's financial markets. Well, the tree's long gone, but the system remains. It's made millionaires out of some investors, and it's stolen the life savings of others. We're covering the business stories that have redefined the way we live, work, and play. As CNN celebrates its 25th anniversary, we asked the editors at Money Magazine to come up with a list.
We look back at the kinds of changes that have occurred over those 2.5 decades, and we've tried to think of the business process, the business event that affected those changes.
25 years and 25 business stories. We're on our way to number one. Want a hint? It was about big dreams.
People were driving around in fancy cars. People were retiring very young.
Also coming up, justice served and lessons learned. And the urge to merge. Corporate marriages give birth to layoffs. There's more to come on CNN's Top 25. Time for the number one story. It was the age of casual office wear, of millionaire college grads, and of those squarest of squares, stock market analysts becoming celebrities. Oh, for the way it reshaped our lives, empowered the individual investor, made us rich, and made us poor. The boom and bust of the 90s is the number one business story of the last 25 years. Back in 1999, Steve Taney was the picture of stability.
I work for a plumbing supply company. I've been there for 22 years.
He had a pension. A bit of money came out of every paycheck, and he expected to get a fixed monthly payment when he retired.
All of a sudden, it was decided by my company to turn the pension plan over to the employees.
And that made Steve part of a trend. Companies shifting the risk and expense of investing for their employees' retirement over to their workers. Steve was now in total control of his destiny.
I picked and choose where I wanted the money invested.
But he didn't know how or what to pick. So he turned to his financial planner, Doug Flynn.
I went right to Doug with it, because I had investments with him already.
Doug invested Steve's money in mutual funds, considered safer than buying individual stocks.
We were up probably about 30% between late 99 into early 2000.
But that wasn't enough for Steve. The tech boom was playing out all around him.
People were driving around in fancy cars. People were retiring very young, buying houses in Florida or Las Vegas, all over the place.
His lack of understanding didn't stop him.
I don't know what affects the stock market. Honestly, I don't even know what makes stocks go up and down.
He didn't need to know. He just needed a way in.
There was a pulling back of the curtain on how Wall Street worked. That was actually very interesting and very empowering for the individual investor.
And while dot-com companies stole the headlines, there were safer tech stocks to invest in with real products and real profits, like Lucent Technologies. Lucent was Steve's safe bet, one of the first stocks he bought in March of 2000. Spun off from AT&T, Lucent was one of the most widely held stocks in the world, with more than 3 billion shares held in retirement accounts, pension funds, and by investors like Steve. Steve bought Lucent at $72 a share. 2 days later, the stock had dropped $5.
And as it started going down, I bought more of it. I was way over my head.
As Lucent dropped another $10, Doug tried to get Steve to sell.
He just got completely wrapped up with it.
U.S. stock markets take another steep dive.
The NASDAQ is down 337 points.
On the morning of April 14th, 2000, 39 days after Steve bought his first stock, an inflation report triggered a massive sell-off. It turned out to be the biggest point loss in U.S. stock market history. It was the biggest single-day loss of money, well, since money was invented. Look at it this way. Each one of these 1,000 dominoes represents $1 billion. On that single day, $1 trillion worth of investor wealth came tumbling down.
I lost about 85% of what I had when it was turned over to me.
Everybody lost money that day. Michael Dell's net worth dropped $2.3 billion. Even Bill Gates lost $11 billion. But they didn't lose 85% of their retirement savings. Steve knew he was beaten, so he turned back to Doug.
He was smart enough at an early point, relatively, to say, this is not for me, take it back.
But swallowing his pride was tough. Steve knows others who hung on and lost more. His advice?
Start all over again. Just don't expect to get up to that level again that you were at. Just try not to lose any more of it.
It was the bust of his lifetime, but it taught Steve the lesson of the ages.
If someone told me you had something that couldn't miss, I wouldn't buy it.
Steve Tanny's still in the market, but now he's an investor, not a speculator. That's it for this edition of CNN Top 25. Check out our website, cnn.com/CNN25. And tune in next month when we count down the top 25 sports personalities of the last quarter century. From Wall Street, I'm Ali Velshi. Thanks for joining us.